Hey everybody, welcome back to Whiteboard Finance. My name is Marco and I'm here to help you master your money and build your wealth. In today's video, we're going to be talking about the potential housing crash coming up in the next time frame. You're going to have to wait till the end of the video when I give that time frame, but I think it's going to be happening pretty shortly here in the near future. So housing prices are at record highs, which we all know. Price per square foot have never been higher. So the logical question is, when will it crash? So the pandemic absolutely destroyed Main Street, and by Main Street I mean your local businesses, your barbershops, your bars, your restaurants, but it hasn't hurt asset prices and it definitely hasn't hurt Wall Street yet. So there's a lot of relief that came from the CARES Act, which we all know in the form of stimulus checks, PPP loans, small business loans, etc., etc. But part of this was actually to deal with private and federal mortgage forbearance. So in today's video, we're going to talk about 3 reasons why housing prices are so high. We're going to touch on that very quickly. We're going to talk about the CARES Act, the unemployed statistics, and also some overall statistics. And then we're going to talk about how big this potential price correction or price drop could be and when it's going to happen. And then finally, I always end the video with my thoughts. So before I get into the video, very quickly, if you're in the market for a house, check out in the link in the description below. I actually created a home affordability spreadsheet. It's super popular and it's super helpful. Just check out the link in the description below. You can get it down there. So let's get right into it. Okay, so here are 3 quick reasons why house prices are so high. It's important to understand this before I go into the rest of the video. I've actually talked about these 3 reasons on social media, on Twitter and also on Instagram. If you don't follow me there, go ahead and do that. But basically, I mentioned this in my video from about a month ago, if you should buy a house or not in 2020. So if you already heard this, you can just skip this section. However, I think it's important for new viewers or people who have never seen this before to actually understand it. So I'm going to fly through this very quickly. So the first reason is low interest rates. So at the time of this recording, interest rates are pretty much at their all-time low for both 30 and 15-year mortgages. Rates that are lower allow people to fit more house into their monthly budget because that's typically how American people, that's how they think. They think in monthly budget as opposed to just not having debt. So if you can get me a cheaper mortgage, I'm going to buy a more expensive house because I can fit it into my quote-unquote monthly budget. So take a look at this chart right here. You can see over the past few years and decades that mortgage rates are at their all-time lows right now at the time of this recording. My wife and I are actually pre-approved for a 2.99% fixed interest rate on a 30-year mortgage, which is super cheap. That's almost just above the rate of inflation or the CPI, Consumer Price Index. And then also the 15-year at that same bank is 2.79, and I've actually had people comment that they're finding deals even lower than that at the time of this recording. So money is cheap. Low interest rates, think of it like a lever. Interest rates dictate everything. That's why it's so important to understand where rates are at, not just for mortgages, but just the federal funds rate in general. When rates are high, asset prices are high. Look at stocks, all-time highs. Look at real estate, all-time highs. That's because people are incentivized to put money into the market as opposed to saving. So when interest rates are high, people are incentivized to save and keep it in their savings account. Okay? So number 2 is high demand. So I am a millennial. I was born in 1987. I'm actually right in the middle of the millennial generation. I can't get more millennial if I tried, okay? So millennials are actually the most populous generation in the United States at the time of this recording. They actually overtook baby boomers earlier this year, okay? So millennials are getting married, they're having kids, they're trying to move out of cities and get into the suburbs, or they're trying to stop paying rent, or they're trying to get out of a small house into a bigger house. So if you take a look at this, purchase mortgage applications are at an 11-year high, okay? They haven't been this high in 11 years, so there's a lot of demand going on right now. So this basically boils down to a classic case of supply and demand. Demand causes prices to increase because there's that pressure on inventory, which brings us to our third point, low inventory. So going back to that baby boomer example, all the baby boomers, at least where I live here in Northeast Ohio, they're sitting on their houses. They're not putting them up for sale because they know that if they do, yes, they're going to get a lot of money for their house, but they're also going to have to move into somewhere else, which is very expensive compared to their house that they're moving out of. So housing inventory is incredibly low. So take a look at this chart. This is actually pulled from the MLS. I have access to the MLS. I used to be a licensed real estate agent. I'm no longer one, but I have access to the MLS. Let's just put it this way. So from 2010 to 2020, you can see how the inventory for the markets that I'm looking at has steadily declined, and this does echo what's happening on a national level. It basically boils down to baby boomers not moving. Okay, so let's take a look at how the CARES Act, the stimulus, unemployment, and also some housing statistics are going to affect this market bubble that we have in real estate right now. So there's actually a rule that you can't foreclose on someone 60 days after March 18th, 2020. That is a federally mandated rule, okay? So say, for example, you got behind on payments and you're basically supposed to get foreclosed on, the stimulus or the CARES Act, actually prevented that from happening. So you have 2 months after that. The other one is called mortgage forbearance. I didn't feel like spelling forbearance, so I just put for, and then that's a picture of a bear. It's actually not bad compared to my other drawings. So there, mortgage forbearance, that's not even a joke, that's just a terrible drawing. So mortgage forbearance is basically where your lender allows you to pause your payments. So you can request forbearance up to 180 days and then extend it for another 180 days if you went through a quote-unquote financial hardship. So that basically tacks on 360 days of mortgage pause or mortgage forbearance, which is actually going to go into the end of my analysis at the end of this video. So remember mortgage forbearance in that 360 days. And then finally, a big factor that not a lot of people are talking about when it comes to mortgages or even rent, if you will, is unemployment. So there's 30 million unemployed. That number is probably closer to 15 or 20, depending on people that are kind of like mooching off the system. But basically, everyone knows about that $600 a week in addition to what your state is going to give you for unemployment anyway. That actually ends at the end of July. So remember that date as well. That's at the end of July of this year of 2020. So when that $600 a week goes away, people are either going to have to go back to work, they're either going to stay on unemployment, or they're going to have to basically just scrape by with what they have, okay, if they don't qualify. So 37% of renters and 26% of homeowners are at least somewhat worried that they will face eviction or foreclosure in the next 6 months. So that's about 1/3 and 1/4, you guys. That's not just renters, that's also people that own their homes, which I think will actually play into this whole thesis of this video at the end. And then finally, in June, you can see this headline right here, 30% of Americans missed their housing payment in June. So does this sound as bad as it is? I don't know, because when you say housing payment, that's actually broken up between renters and people that own their home. So it's not like 1 out of 3 people are going to get foreclosed on, for example. And that's just for the month of June. Who knows if those situations will get better, but they also may get worse as well. So taking all these numbers into account, let's go into how big of a price correction I think there will be and when it will happen. Okay, so how big? That's what she said. How big will this price correction be? So I think that if you take a look at this chart right here, you can actually see housing prices versus inflation. This chart actually goes back to earlier than 1980, and it goes all the way to pretty much where we're at in 2020 right now. So you can actually see here the consumer price index, that's the solid black line on the bottom. That is typically how inflation is measured. Some people argue that because they changed the definition, but just for the sake of this chart, let's just pretend that this is the cost of inflation. So in 1980, you have your benchmark of 100, meaning that let's just say a dozen eggs cost $1, and then you have in 2020, it's basically at 300, meaning that it's gone up 3 times, if you will. So you can see here that housing prices, they don't appreciate. Shout out to my friend George Gammon. He has a very good video on this. But housing typically just keeps up with inflation. It's not necessarily a great asset to own, especially if it's your primary residence. But you can see here that housing prices don't appreciate, they inflate. So you can see in 05, 06, that was pretty much the housing bubble which crashed in 07, 08. It hit its low in 2011, 2012, and then it started to appreciate after all the money printing and the low interest rates from 2010 and on. So you can see here that we are basically in 2020 where housing prices are at a ridiculous all-time high, and if they revert back to the CPI, we should see a 34% decrease in housing prices. So if we see a 34% decrease in housing prices, that means a house that's 100 grand should realistically cost 64. If you see a house that's 200 grand And these are Midwest prices, relax. Everyone in California, they can't get you a trailer, blah, 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 blah. Well, move, okay? A $200,000 house should be closer to 132, and then a $300,000 house should be closer to 192. Do I think that this is going to happen overnight? Well, wait till the next slide to find out. Okay, so to finish off these videos, I always give my thoughts at the end based on my research. Again, I don't have a crystal ball. I'm just a guy on YouTube. Do your own research and critical thinking. So if you take a look at all these factors, you have the CARES Act, which provides 180 plus 180 days of forbearance, aka 360 days if you use both of them. You have 120 days to actually go through a proper foreclosure process. And then you typically tack on 30 days of admin stuff. So if you go to the auction, title, paperwork, deed, all those things that go into buying a house, let's just tack on that. So with my personal thoughts, I think that prices will start to correct once we start to see these foreclosures come on the market, taking a little bit of pressure off that demand that we talked about. I think that's going to happen within 12 to 24 months, and I know that's a pretty wide time frame, and people wish that it was going to happen in 6 months because they're probably waiting like me to buy a house. However, the truth is that this probably won't start happening until a year from now. I'd say 12 to 18 to 24 months. Now the thing is, this is not going to drop 34% as that chart indicated. That would only happen if there's an extreme bubble that popped. I think that this is when prices will start to correct. So as always, you guys, I hope you got value out of this video. This is recording at the end of June. If you guys haven't gotten into the stock market yet, check out my link below for Webull. They actually give you 2 free stocks just for signing up. So it's basically like free money. Whether you decide to use it or not, check it out. I hope you got value out of this video. If you did, please share it on Facebook. Please share it on social media for anyone that's interested in buying a house within the next 12 to 24 months. As always, thank you for watching and have a prosperous day. I'm just waiting for the negative mortgage rates. I can't wait to get paid to take out a mortgage. That's going to be nice. And then I'm going to go on Robinhood and buy Nikola.